Surprisingly, yes.
Well, Tim, great to have you. This is a little backstory for people watching at home. We just met for the first time after 4 years, been connected through the magic of talking.
And let me say officially for the camera, it's a great pleasure to meet you face to face, dude. It really is. It really is.
What we're talking about backstage. I want to start with your exact words. It's going to get bad. This is obviously what...
In the U.S., yes, from a regulatory standpoint.
I don't think there's a lot of investors out there who want to hear this right now. So why are you saying the crypto market is going to get bad in the U.S.? What does that mean?
Generally refers to the regulatory environment in the U.S. because the rules were established starting in 1933, right? They've been updated periodically since then. But they're really established for the scenario where you have 10 investors putting $5 million apiece into an investment, not where you have 10 million investors putting $5 apiece into an investment. So the legal framework doesn't fit. And from a security standpoint, there are taxation and other issues, but it's a securities aspect, and the SEC just has to enforce the rules it's given, right? It's Congress that gives the rules to the SEC. Presumably they'll eventually be upgraded and modernized.
So you're saying old laws are about to come
About to conflict with new reality, yes, that's right.
And so what does that mean for people? So obviously you're an investor in the space, early to Bitcoin, early to crypto assets. You recently said that you were moving to Malta. And
we're not going to move to Malta, we're going to establish another fund in Malta, as well as probably one in the Emirates. We want to establish the world's first Sharia-compliant crypto fund.
And this is because the regulatory environment is bad, and you think there are going to be repercussions for investors who made decisions here?
Two different things. We were going to do that anyway, because not everyone likes to invest in the U.S. We set up a Cayman feeder, but people don't really like that either. So in Europe, so he goes, let's set up another fund. And the idea of setting up a Sharia-compliant fund was just an interesting idea that I've had for almost a decade and just never found the opportunity to do it. What will happen in the U.S. is an open question. So I just view this as jurisdictional diversification. We diversify in terms of ICOs, we diversify in terms of trading assets. Now we're going to diversify in terms of jurisdictions. It just makes sense from an investment standpoint.
It sounds like the worry is, we've heard a lot of dialogue lately, especially in the mainstream media to use that terminology about some crypto assets might be classified securities, which means some of the things that people are trading right now on exchanges that are popular in the United States might be something they're allowed to do today, and that might be taken away, or what's the exact fear here?
The issue is that if these were securities,
and these being Bitcoin,
if ICOs
Ether,
were securities, Bitcoin, Ether, I think they're sort of in a different category. Bitcoin probably, or almost certainly. Ether,
almost certainly not.
We'll see. Right? Yeah. Are they securities? Or are they not? But many of the ICOs, rightly or wrongly, I don't take an opinion whether it's correct or not. Many ICOs may be deemed to have been securities when they were issued. And so then you get to things like rescission offers, so the ICO company has to offer to buy it back. And if the ICO was done a while ago, that means Ether was at 300, now it's at 700, or Bitcoin was at 1,000, now it's at 8,000. And that's going to be very difficult for those companies to pay it back because they can't pay the dollar equivalent. They will have to, assuming this happens, they'll have to pay the equivalent in BTC.
The conditional here, the conjecture that we're making, that may or may not come to pass. It sounds like you're saying if the SEC comes out, if they say ICOs have raised money in the U.S. are securities, what will happen is that they will have to effectively repay investors.
They may have to. They may have to. Because technically, and maybe not so technically, they will have violated U.S. securities law if they're determined to be securities. The SEC, like any enforcement agency, has some flexibility in terms of what it does in terms of enforcement, but it could require that. I have heard that there are a couple of ICO companies that are negotiating that at the moment with the SEC on the level of rumor. I can't say definitely, and nor do I know which ICOs, but that will be a problem that has a ripple effect, not just for the ICOs, but then crypto exchanges in the US will deem to be trading securities. Funds like mine, which are created on the premise of, designed around the premise that the ICOs or the tokens are generally not securities, life gets more complicated for everyone, particularly in the US, if that happens.
So once again, taking questions, hashtag CoinDeskLive. So getting back to this question, it sounds like you're saying that not that there can't be securities tokens. I've heard a lot of people talk about this new class of tokens that themselves are securities, but that these public cryptocurrencies or these ICOs might be securities, I guess, from your perspective, how are you seeing innovators deal with that? Is this clamping down on innovation?
Well, I think it flies in the face of a fundamental principle of cryptocurrencies, and that is easy access by everyone. Go back to my example, 10 guys putting $5 million each, and if $5 million you're at the qualified purchaser level in the US, right? So you're a QP, and if you go away from the premise of 10 million guys putting $5, you've just gone back to the traditional investment scheme, right? Or traditional investment focus. And the idea is to decentralize, to democratize, to spread around all of these opportunities. And if we go back to the traditional securities rules, and not just in the US, in most countries, it has the opposite effect. It's the wealthier you are, I guess the more risky decisions you can make, but that protection of the consumer, and that's ultimately the goal, and it's a laudable goal, but the protection of the consumer that is being, or that may be applied in such a broad fashion, is very contradictory to the heart behind almost every crypto asset, cryptocurrency.
Well, so you put out, I know, your framework. There's a lot of people looking to categorize tokens. I know Don Tapscott announced yesterday that he was looking to put together a token framework. You put together sort of 7 pillars of investing. Right. And I was sort of inspired by this idea that we don't really know how to characterize these tokens, but it sounds like within your framework, you think that that it's possible for cryptocurrencies, crypto tokens, to not be securities.
Well, no, if they are securities, they can be registered even under current laws. It's a lot more cumbersome, it's a lot more restrictive, but you can do it. The 7 pillars are mainly geared at should we invest. So there are 3 of them: the team, execution, idea, very standard sort of stuff. The biggest ones in the crypto space, tokenization, is there a rationale for tokenization? And then the one that most fail is are there independent drivers for price formation? So yeah, you've done your tokenization, there's a rationale, there's a reason to tokenize, but now you're going to sell it to people. And presumably they want to use it, but they also don't want to lose money in the process of using it, or it's straight up a security and they want it to appreciate. Regardless, there has to be a reason for that price to at least be stable and in principle increase, whether it's a security or not. And the interesting things with the global environment, why Malta and other places are becoming so popular, is because ICO companies can forum shop. Where can I best issue my ICO? Where can I best issue my token? Or I suppose I should say distribute my token, right? And then the exchanges will have to figure out, okay, can I list that token or not? Like Japan, I believe, actually has a list. If you can, or is it maybe it's Hong Kong, has a list. You can list these tokens, but you can't list these tokens. We may get to the point where exchanges in various countries list very different sets of tokens, and if you want to trade in that particular token, you want to go to this or that exchange, depending on where you happen to be.
So I want to go back, introduce a 4-letter word here, bear. That's something a lot of people don't like to say or position around here. Do you think we're heading back to the conditions under which we met the bear market? We saw Bitcoin go from $1,000 to around $200. Do you think the conditions could be such that if some of these crypto assets are deemed as securities, we could see just big market loss of confidence?
Well, arguably, having gone from 20,000 even to 9,000, that's pretty much a bear market by most standards. And
well, I think
come up from
it has
6.
to last for a certain amount of time, right, or something.
Crypto time, right? I wrote an article for you guys that talked about how more quickly it passes.
So you think this is a bear market?
This is definitely a bear market. The duration and whether there's another drop left in their bear market, it's a tough question to ask. What'll drive a bear market was like Mt. Gox. Something at Mt. Gox was a total surprise.
And that was the crypto exchange lost hundreds of thousands of dollars worth of Bitcoin at the time.
Or the millions of dollars, right. And then, or the PBOC, the People's Bank of China, suddenly saying, okay, we're going to suppress crypto and we're going to suppress exchanges. And so it plunged. Those were unpredicted events and probably unpredictable events. This, what we're looking at, if you just talk to the people around here, everybody realizes the United States is going to be a tough jurisdiction. So US investors are now discouraged from investing, and by our measure, about 40% of ICOs, it was 10% last year, and it's probably going to increase this year. So people are already just staying outside of the United States. So if there's a crackdown, or if some ICOs are retroactively determined to have been securities, sure, it's going to have a negative effect. But I don't think it's going to have a negative effect along the lines or to the degree of Mt. Gox.
So I know you mentioned Mt. Gox. Their interesting thought experiment is Is it a success that we haven't seen something like that? Because we did see this run up in prices. In a lot of respects, we have seen a fairly orderly departure of capital from the system, maybe without the collapse. I think a lot of people are predicting things like Tether, US dollar cryptocurrency. We just saw Circle on stage, soon to announce a US dollar cryptocurrency. Is it a good sign that we haven't seen a major infrastructure component of this market go down, or do you think we have seen failures?
No, it's fabulous. I mean, even if you look at the Bitfinex hack, was what, 36% of the assets, and it mutualized that loss and recovered and did a fabulous job with it. And you had the recovery rights token, which is a damn clever idea, I think. And there has not been that sort of infrastructure failure, and there really can't be anymore. I mean, at one point in time, Mt. Gox, I think, had 90-something% of all Bitcoin trading, and Bitcoin was effectively 95% or whatever it was of the entire crypto space, as Bitcoin and Litecoin. So at that point in time, when Gox went down, it still had like 16%, but it was still a lot. It would be very difficult to have an equivalent catastrophe of that level now because things are so diversified.
You're saying just another Mt. Gox style event isn't possible?
No, I don't think so.
Even if something like Tether, with people have brought up, I know is a massive component.
Tether would, the odds of every Tether being backed by US dollars, I think, are fairly long. Just my opinion. I have no evidence one way or the other.
There's a prediction market there, maybe on offer.
There you go. But some people have said that if Tether were discovered to not be backed fully by US dollars, there'd be an enormous collapse because a lot of the value of Bitcoin is driven by Tether. I don't buy that. The market cap of Bitcoin is so large, but even compared to all the Tethers that are out there, and that it would hurt, absolutely. But I don't think it'd be a collapse anywhere near on the scale of Mt. Gox.
So Tim, my last guest on here was Mr. Bart Stevens, Blockchain Capital. He was talking a lot about just the move of millennials to crypto assets. So do you think this is reason enough to invest, this idea that this is innovative, millennials like it? Is this enough of the foundational components here? Or what is your thought about this idea that you could invest in the movement towards crypto assets?
I don't think the answer just applies to the US. Right, people look at millennials and they think about the United States. I had an interesting meeting with an ICO company that was talking about the Indian market, which is regulatory, also a hazardous one from a regulatory standpoint. And the gentleman said that the number of people between 18 and 40 in India account for 70% of the population. So I don't think, the United States now is 24% of the world's GDP. The millennials are a small fraction of that. It's still a big portion, but after World War II it was more than 40. So while the US is still the largest economy in the world, the rest of the world is much less dependent on the US. So I don't think you should focus on any single country anymore, jurisdictional diversification, nor do I think you should focus on any age group in the country. Younger people are generally more open to new ideas, and people who are raised with new ideas, to them they aren't new, it's part of the background. So clearly that age group would be much more comfortable with crypto, but I don't think it's because they're millennials in the US or some category like that.
Still take questions, hashtag CoinDeskLive if you want to write in. I think the question that a lot of people are asking too is there explosive growth left in this market? We've seen Bitcoin go from pennies to $20,000. We've seen Ether make a similar movement in all these crypto assets.
Right.
Is it possible that people have missed out on the largest wealth creation that this technology will create?
In terms of a huge run-up of the large currencies, I would be hesitant to predict that it's the last one, right? Because who would have counted 20 grand in 3 months at the end of last year? But one thing I tell people is that the third person singular neuter pronoun in English doesn't apply anymore. It, right? So you said this market in your question. And there will clearly be spectacular run-ups. They happen on almost a weekly basis, if not more frequently.
And these are happening in these smaller
It depends, which or sometimes not so small, particularly after the run-up. There will be opportunities here, but instead of, I think it's getting harder and harder to say everything is going to follow the same lead. The correlation is way too high in this market for really good diversification. Bitcoin, last I looked, was 36.6% of total BTC, so that was its market dominance as it's referred to. My personal theory is that when BTC market dominance falls below 20%, we'll see much more diversification much more decorrelation in terms of how assets trade. Will there be a massive run-up like we've seen? Perhaps, but there can't be many left, right? We're running out of zeros here. But in individual sectors or assets or individual tokens, whatever you want to call them, certainly will have run-ups that will dwarf what we've seen now. You just have to find them. You have to anticipate them.
So final thoughts here before we wrap up. So it sounds like you're saying the real growth is not in the established crypto markets. If I'm a new investor coming to the space for the first time, you're saying look for the big opportunities, look for the long tail.
I'll give you a pure fiat investment answer. You need to diversify, right? You need to put some in the big guys, let's call that your conservative portion of the portfolio, some in the mid-cap ones, as we call them, and a little bit of mad money, 1, 2, 5, if you're insane, 10%, right? And take a flyer. But you should definitely diversify in this sector, just like investors have diversified for decades in the fiat space. It turns out that's the way you actually make the most money and get the most sleep.
I guess the counter argument is, what if you could put it all in Google versus 100 different ones that failed? Is there a Google in the bunch?
The answer to that is hindsight is perfect, right? So when you had 20 search companies, you had Alta Vista and Yahoo, it did not look at that point in time like Google was going to make it. So if you got lucky and put all your marbles on that one, yeah, okay. But what are the odds, right? The odds are extremely long. You're much better off, and this theory applies as much to the crypto space as it does the fiat space, maybe even more, is diversify. You don't necessarily take 100 positions, but take 8, 10, 12 positions. That in the long run will give you the best returns.
I like that statement, what are the odds? Good motto for people out there listening at home. Tim, I want to thank you for being on here. Everyone, thanks for listening. Of course, we'll be back after the break with CoinDeskLive. Tim.
Great. Thanks again.